So we just had one of the hottest IPOs of the year, which is Instacart. So if y'all don't know what that is, make sure you watch the entire video because we're gonna break down exactly what is going on. And for those who don't know, an IPO is basically initial public offering. This is when a private company decides to go public because they want investors like you and I to start investing in their company so they can take that money and then put it into products, put it into new technology and grow. That's why there's a lot of hype, bro, around these, different IPOs, because if they are actually going and doing this process, that means they're a growing company. That means they're trying to expand, which is why everyone gets super hyped with tech IPOs. So now that we got that out the way, Rel, just explain to these people what Instacart is. Should they be looking into it? And also, before you do that, remind them what they have to do.
Y'all have to subscribe to the channel, please. And also, just like the video. We put a lot of effort in. Please like the video because we're going to tell you all about Instacart and whether or not you should actually buy this thing. So what is Instacart in the first place? Instacart is a company that has an app or a website where you can go and actually get your groceries. But no, not you getting them. You could get somebody to come and bring them to you. That's the beauty of the app. And this app and this company got so popular during the COVID time period because, as you know, nobody wanted to leave the house, but you had people that would actually hand deliver your groceries to you. So that's extremely beneficial for you. And the thing is, bro, when it comes, they don't really make their money necessarily from like the transactions on the deliveries and everything. They make some money there, but most of their money is coming from advertisements. Yep. And I think that's what people like about it. And honestly, they have a huge use case in big cities because in big cities, bro, like you don't want to be outside walking with 500 bags in your hand. Mm-hmm. I know you lived in this city for example, out here in New York City.
I definitely did that. Instacart was huge. When I was living in Brooklyn, it was very close for me because like I used to have someone just come in. It was during COVID time. Very simple. I love the app myself. I love even the actual website itself. Super friendly. In the city though, it's a different story, right? I had to go upstairs or I had to take the elevator, whatever it was. I was like, yo, I'm gonna just use them again. So it was very easy.
Exactly. And the only thing I would say is I'm a little worried as far as like, let's say suburban customers, because they're more likely to just go out and get their groceries. They have a car, they're gonna get that. But I think they are gonna be a hit in big cities for real.
I learned a new word today, suburban.
Suburban.
I'm serious. I'm not trolling. If that's a real word, I just learned it. I thought it was like suburbs. I knew it was like a together thing.
It's suburban. I said suburban. My fault.
I thought it was an actual term. No, you actually had me. Okay, cool. So let's get into this, right, guys? So we're gonna share everything. The link will be in the description below for you guys to follow along. Make sure you guys already have liked this video and subscribe to the channel. But before we talk about Instacart and the whole IPO structure, I want to make sure y'all are very aware of this, right? The tech IPO market is back and deal valuations are rising. What that really in simple term means is, remember, when a company is about to IPO, that means they're finally about to go on the stock market. They're public. So they are using the valuation they got from the other investors that were part of their journey prior to them going public. So they could be like, yo, we think we're worth 20 million or 20 billion, depending on how big the company is because of the initial investments we have. Simple as that. That's why people say like, yo, deal valuations are rising or not. So the reason why not to get fooled is because look at this. The majority, which is 70% of the 73 IPOs year to date, were trading below the IPO price. That's pretty substantial, bro. What do you think about that?
That's insane, bro. That just shows you it's a lot of pump and dumps that go on when it comes to IPOs, bro.
Exactly. And guys, if you think about it, right? The reason why we're not fans of IPO and our answer that we're going to tell you guys at the end, the reason why we don't like IPOs is because you're not really too sure of what's going to happen. You don't know if the company's going to go up or not. You don't have enough details. Like, it's like if you're talking to a girl, you got to know, like, yo, is she cool? Is she not cool? Like, how is she with her friends, et cetera, et cetera. If you're talking to anyone, you have to do that. If you're playing basketball and you're scouting someone, you got to know how they handle the ball, how they shoot the ball. You don't have enough information on them yet.
Yeah, and like you said, even with your analogy, that's like, you making her your girlfriend without even getting to know her first. And that's what y'all doing with y'all investments. You're committing your money to this company to handle your hard-earned money and you don't really know exactly how they perform. You need to see, for example, earnings reports. And earnings reports, that's like a financial report card, comes out every quarter of the year.
Yep.
You haven't even seen their earnings yet, not even one quarter. So how are you going to be putting your money into it before even knowing what they really about?
That's a fact. That's a fact. So that's our stance on IPOs, which is why, you know, we usually stay away. But for Instacart itself, I personally do like the company. As Rel said, they make a lot of their money through advertising. They don't really make their money through like the actual initial fees that they check people, because their fees are not substantial. I can say that. So right now, if you look at it, when it did IPO, it closed up 12% in their debut. Let's just make sure we know this, right? They closed around 12%. Initially, they popped 40% in a day. They, like, think about it. They opened and they popped 40%, went up. That's ridiculous, bro. 40%? That's not wild?
Bro, that's not, it's crazy because it's wild, but it's not even atypical in IPOs. Like I mean, you could get into that.
It's not, and that's the thing we want to talk about with Snow. So if you guys remember Snowflake, which is a cloud-based company, it has a lot of hype, amazing company, great technology. Do not get me wrong, I think Snow's gonna be great. You gotta give it some time though. So this is the thing, Snowflake, Snow is a ticker symbol, more than doubled in market debut. Not 40%, doubled, which is the largest ever software IPO. It started trading around $245. Doubled? That's not insane, bro. And guys, if you think about it, it's like, oh, that's great. Like, people really made a lot of money. If you took advantage of it, yeah, today it's trading at 160, basically. Is that a good investment, bro?
I feel bad for the people who got in at the top, bro.
Think about it. Let's think about this. Coinbase. I know you guys like Coinbase. Right now, crypto might not be the thing, but Coinbase closes at $328 per share when they first opened, when they first went IPO.
And I think they actually hit $400 at a point, if I can remember correctly.
They did hit $400. Bro, they closed at 328. They had a pop and they shot as high as 429. 420, which is ridiculous, which is absolutely insane. Guess what the price of it is today? 78. You're not even in triple digits. You're in double.
I don't mean to, facts, you're in double digits now. I don't mean to laugh, but it's just like, bruh, it's like, I just feel bad for people, because you know what makes people get into these IPOs so early, bruh? It all comes down to FOMO, the fear of missing out. They're like, man, I got to get this right now before it skyrockets. And as you've seen in that stat, it says 70% of stocks are lower than their IPO debut.
Yeah, 70% IPOs are lower and right now than their initial IPO price.
Yeah, see, that's what I'm saying, y'all. Like, most of the time, 7 times out of 10, you're gonna end up taking a loss when you get in on IPO day eventually. So it's like, man, y'all gotta just, I always say not to FOMO. Wait for more information on the company. A company, put it like this, a company's never gonna, I'm gonna say never, but most likely you're not gonna just open and hit the moon and never come back down. Believe me, if there's people that got in on IPO day, even if it skyrockets for the first month, it will come back for you. Mm-hmm. Stocks will pull back for you if you have patience. I think that patience is why people get killed. So here's what people do. Oh, yo, did you hear about Instacart? I've been using Instacart for a whole year now. Man, I love this company. And I heard from some people that, you know, you should always invest in the things that you use, which is not always the best thing to do, by the way. Not everything that you use is a good investment in the stock market. So I want to clear that up for people, first of all. But what they're going to do is they're going to get Instacart on IPO day. They're going to get sold off on, and here's what they're going to say. Well, the stock market's a scam, bro. It's a scam. I lost all my money in the market. Like, no, you're buying a good investment at a bad time. There's a whole difference. Right? So I need people to understand that.
No, that's a fact. I don't think it's all stocks are bad. I think it's just the timing of it definitely matters. So that is our summary, which is why we personally will not be taking part in Snow and the whole IPO and, you know, Coinbase and IPO and then this whole Instacart IPO. I think we always tend to just wait and see what happens. And then if it turns out great, it does. If not, we're okay with it. We'll rock.
We need at least 2 quarters of earnings. At least.
Just to get a feel of like how it is. But let us know what y'all doing, right? Let us know if you guys like it. Let us know if you already hopped into it. Let us know what your thoughts are on the actual company. And if you like this type of episode, please make sure you like, comment, and subscribe to the channel. Plus hit that little notification bell because we drop
2 videos a week.
and you do not want to miss them. We will check you out on Monday, but until then, peace.
Peace.
Soundstripe.